Welcome to TradeSpoon and Yellowtown. My name is Carpella. I'm CEO and founder of both companies. And today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions, talk about, we just had a CPI data, inflation data, we had unemployment data 2 weeks ago, what to expect in the market, where are the opportunities, and then how the Yellow Tunnel subscription services help you trade, navigate market volatility and uncertainty. BJ, welcome. Harry, Phil, Robert, Bran, Wanda. All right, we have a few new names. This is great. Thank you for joining. So before we jump into trading psychology, that's one of the main ideas behind Yellow Tunnel, is that not only you need to predict how well the market behavior and what the support resistance levels and trends, but also predict your own behavior when the market goes against you. So let's look at the market first. S&P is up 1%. We're at 64.35. Made new all-time highs, broke to the 64.24 on the better than expected inflation data. If you look at the interest rates, pretty volatile. 10-year yield is up. It was down. Now it's kind of a stable, but still no new signal at 4.30. Let's look at one-day chart. Probably most important chart is the 10-year and 2-year yield. Here, pretty volatile reaction, and for now it looks like yield is up. Steepening of the yield curve, which is usually considered to be a positive for the market, right? When the 2-year drops and 30-year goes higher, steepening of the yield curve. Basically an expectation that the Fed will cut the interest rates. Inflation is going in the right direction. We had CPI data, we're going to have a PPI data, and then retail sales this week. And 2-year yield continues to go lower, right? Which is positive at a faster rate than the 30-year and 10-year yield. Dollar is stable. It's been gravitating between 97 and 100, but also weak due to the tariffs, right? We have a little bit more clarity on tariffs now. VIX is at 14 handle. VIX is low. We're at all-time high, and you can see we are retesting the lows and volatility. Spiders made new all-time high, up 1%, continues to grind higher, and then small caps are up 2%. So regional banks are underperforming, but trying to do a catch-up trade. You can see they're retesting recent lows. You have regional banks, underperforming stocks. Regional banks, small caps, home builders continue to grind higher on expectation that interest rates will go lower. And then you see metals and miners breaking out to the new highs. So let's look at our predictions. So you can look at aggressive power trader. This is the model that runs every day. It can help you determine kind of support and resistance levels. So for today, we have 2 stocks that the model identified. One is Expedia. Expedia is up significantly. So the model runs at night, right, based on yesterday's close prices, and gives you short-term signal. So you can see after the inflation data and people are still traveling, you can see a pretty sharp move in Expedia, up 4%. CME is going in a different direction. Let's look at CME. CME is actually down 3%. And then in terms of spiders, model sees support at 632, overhead resistance is at 637, right? For the next 10 days, it sees that the market is overbought. So 632 is a support, 637 is overhead resistance. Let's look at the positioning. So I usually look at our predictions based on the AI model that we have. And then I looked at the option data, especially as we approach an expiration. Right? We have VIX expiration tomorrow. And then we have retail sales. So right now the gamma flip is again 63.18 on SPX, which matches exactly what the model predicted on SPY. Right, there's 1 to 10 correlation between SPX and SPY, just divided by 10. So that matches. And the put wall is now, what used to be a call wall is now is at 6,400. So the biggest position now, it used to be 6,300. Now we broke above 6,400, and you have a lot of position at 6,400 and a lot of call selling at 6,450. So that would be your overhead resistance, right? 645 and 640. If you look at the spiders, should be similar. So let's look at spiders. Let's look at the prediction for the next, well, August contracts expire this Friday. So now we need to look at September. Let's just look at September. All right, so one standard deviation, we could be at 6,500. You can see that's the next high gamma level, 6,450, then 6,500. There's not much positioning all the way to 6,600. So that's your first level of overhead resistance. We're at 6,500, somewhere between 6,500, 6,100, right? So case number one, we're trading higher, right? We're going out, outside of this prediction. Scenario number two, we're trading in the range, right? On the upside, we can see a lot of overhead resistance at 6,500 right now. On the downside, we've retested 6,250, right? 6,300. So that's scenario number two. We're trading in the range between 6,500 and 6,250, 6,200. And scenario number three, we're retesting the 6,000 level. So those are the three scenarios, and we're looking into September expiration, right? End of September, going into October. So scenario number one, we continue to grind higher. Earnings are better than expected, right? Most companies beat their estimates. The bar was set low. So earnings are great. There's more clarity about tariffs and which countries will have and will not have tariffs. It doesn't seem like inflation is rising due to tariffs, and looks like Fed is gonna replace Powell, right? Powell probably will step down in May, and the consensus that the new Fed chairman will start lowering interest rates. I think there's almost 100% chance there's a rate cut now in September and potentially one in December. And stock market continues to go higher, right? We get to 6,600, 6,650. Scenario number two, we're trading in the range, right? We're range bound, somewhere between 6,250 and 6,550, because still, we're imposing 30% tariffs on India is coming due, on Canada, potentially on Mexico. There's a 90-day delay. So that you do see that if the baseline was 10% tariffs, now it's 15%, and some countries it's more than 15%. So then we're trading in scenario number two, or maybe unemployment, right? The last unemployment data was weak. That's first data point. Maybe there is going to be another data point where there is a weak employment data. So you have scenario number two. And then scenario number three, right? Scenario number three, maybe more signs of recession, maybe inflation data, next inflation print will be higher, or maybe unemployment rises significantly, right? And then you have scenario number three. All right, so Nancy here, BJ, Harry, Nancy, Phil, Robert, Ron, Wanda, welcome. How many of you think we're gonna have one? The rally continues, right? We have NVIDIA earnings in the next 2 weeks. Interest rates are gonna be lowered and we'll continue to go higher. So scenario number one. How many of you think scenario number two, we're gonna be range bound, right? Trading is about distribution of possible outcomes, right? If you look at the supply and demand, right, for bulls and bears, where the stock market is now, 64.30. You have one standard deviation move to the right, one standard deviation move to the left. So 70% of the time we should be trading in the range, and then scenario number three, sharp move to the downside. Right, everybody said two. Okay, so everybody said two. I agree. I'm also gonna go with two. I think we're gonna be range bound was obviously bullish bias for now, until the next negative news. But short term, you do have a breakout, right? I mean, for now it's just 1 day that I would wait maybe a day or two. But assuming we close above 6,400 today and tomorrow, then that opens the door to 6,500, 6,600, right? So I think we can continue grind higher for the next few sessions. But keep in mind that from seasonality point of view, we are approaching September, and usually end of August, end of September, this is where volatility picks up, and you could have a pullback. So I think there is little room to the upside, but to the downside, there's a lot more room, right? We already revisited 50-day moving average last week, right? We could potentially, revisit 200-day moving average. Just depends on the news. So that's why it's important to have well-defined rules, right? Aggressive power trader, again, model runs every day. Basically tells you the stocks that the Model C can outperform the market. So today it was Expedia and CME. It gives you support and resistance level. Like, so for CME, we're 276, and it's oversold, right? If you like, I personally like the exchanges people are trading. It's still, I think uptrend is intact. So if you have a longer term view, you might want to enter the trade. If you're doing shorter term trading, I usually in the live trading room, I would go into 15 minutes, right? Look for some kind of a stabilization. And if you don't see the stock is going lower, it's still not a lot of volume, 2 million shares on average. This is where I would go long. All right. So you have these signals. We send out email once a day with these signals, and this is something you manage on your own, right? We give you specific entry and exit point, but the guidelines is that you only have 4 active positions, especially when you just start trading. So you don't overtrade your account. You determine position size. That's the very important part of our live trading room. You also can join us in the live trading room every day. And you have 4 active positions at a time and maximum loss of 2.5% of account value per position. This way, your drawdown is 10%, because you could see market probably losing momentum, right? If you look at the percentage of stocks, I was looking at in the live trading room. Above 20-day average, you can clearly see there's a divergence. We're making all-time highs, but the number of stocks above 20-day moving average have dropped significantly, right? Where it was 80% in July, and now it's was as low as 22%. So that participation is getting narrower and narrower. You see stocks like Nvidia that led the market are only a weak rebound. So you can argue that this rally, even though it could continue being overbought, but it's losing steam, right? It's losing some of the momentum in critical areas, critical stocks. Then we have weekly power trader. So weekly power trader, the model runs on Sunday. So different models, but same idea. It looks for momentum stocks. So this is, I think, momentum-driven stock market. You want to invest in stocks that have momentum behind it. And you can see you have model runs each week on Sunday. Same idea, only 4 positions at a time. 2.5% account value per position at risk in order to determine how much money you're willing to invest. Trend lasts usually 5 to 10 days. So these are longer term trades. You can hold these positions for a couple of days. You can hold them for a couple of weeks. Usually I hold them for a couple of days or a couple of weeks. And you can see this week we have CME. So similar to NASDAQ, CME was on weekly trader. Johnson & Johnson was another signal this Sunday. Morgan Stanley, seemed large move in Morgan Stanley today. Transocean, very large move in Transocean, and Tesla also rallied. So these are the signals that are generated every Sunday. And the idea, you hold them for a couple of days and a couple of weeks. I think Morgan Stanley is a good example. From this week, signal was generated on Monday. You can see Morgan Stanley is participating with other stocks, right? And looks like Morgan Stanley, Goldman Sachs, investment banking, they are breaking out and making new all-time highs, despite without the JP Morgan or some of the major banks, right? So you have that divergence, and Model picked it up, so it did well. It also found Johnson & Johnson this week is also in strong uptrend. I like Johnson & Johnson. It pulled back today, because people are rotating into the more high beta plays. But unlike healthcare, which has been underperforming, right, Johnson & Johnson is actually outperforming. So I think if you want to have exposure to healthcare, then Johnson & Johnson this week and Medtronic were some of the signals that I think is worth considering going long. So that's weekly power trader, same thing. It gives you idea at what point Morgan Stanley is over 147. Obviously, Morgan Stanley is extremely overbought. So you might want to wait for a pullback to enter the position. Actually, Transocean also was a pretty good move since Monday. Oh no, Transocean actually is trading sideways since Monday. Okay, so it's trading sideways. Any questions on the weekly power trader? So you have healthcare example, investment banking, energy, some of the exchanges, right? Exchanges. Then you have dynamic power trader. These are not just the signals, but these are the portfolio that I'm currently managing. So in dynamic power trader, you can see I have JP Morgan, right? You can either buy a stock or, in my example, I have a spread, 295, 305 call spread on JP Morgan. I have NVIDIA call, right? 185 call in September. I have QQQ put spread, so I am hedging. If tomorrow we're still trading higher, then probably want to consider closing this trade because QQQ has also made new all-time high and looks like it's breaking out. And Tesla, right? I have a 310, 315 call spread in Tesla. So you have combinations of stock and option trades. You can see my orders in position. For now, we're still working on integration. So apologize, if you're existing client, you might see these. You will see these messages until we fix our orders and positions. This is synchronized real time with the broker deal, but for now, you can just rely on the option portfolio to see the trades. Earnings power trader is where I trade earnings. Right. So this week we have AMAT and Cisco. Cisco announcing earnings tomorrow after the close. I will do a spread trade using Cisco. So this is also more aggressive trading where I trade option spreads and look for one holding position 1 or 2 days, right? And looking for these outsized returns. And finally, if you're more comfortable trading stock than profit accelerator, right? Instead of trading options, you can also buy JP Morgan stock, NVIDIA, spiders. Instead of QQQ put spread, you can buy SH and Tesla. Any questions on the sub-services? We do send email with our blog, so I encourage you to activate your account, right? You can create your account, and then you have access to every Sunday. You can add info@yellowtunnel.com. We publish blog every Sunday, pick different sectors. I talk about some of my personal life. So that's a blog published every Sunday, and then we publish this webinar on every Tuesday at 12 p.m. We have this webinar where we also publish video where you can review our analysis. Call spread, debit spread. So I think for Cisco, let's look at, I actually wasn't planning to place the trade today because it's announcing earnings tomorrow. And keep in mind, we have VIX expiration tomorrow, so volatility can pick up tomorrow. Usually, right at that week, the VIX moves. So you might want to wait till tomorrow to place the trade, but let's look at Cisco. So tomorrow after the close is the earnings. And let's look at the position. So about 5% move, implied volatility 5% move based on implied volatility data. If you look at the historical volatility on Cisco, It's been, strong uptrend. We had 5% move, 2%, 6%. So average move is 4%, and implied move is about 4 or 5%. So I'm more inclined selling the put spread. So I would sell a put spread, maybe targeting right now 67, 65 strike. Let's look at 67, 65 strike. So I think it's pretty well positioned. So maybe selling 65 or 67 and a half, depends on how much premium you're looking for, right? You can look at the, let's look at the, how much are these puts worth? So Cisco, August 15, this week's expiration. What did I say? 65 or 67 and a half, right? 65 or 67. 65 here is no 66 put. So 66 put is 31 cents, right? So you can maybe get 30 basis points on the. I mean, I would not trade naked puts. I would do, unless you're an experienced trader with a large portfolio, I would do a put spread, right? Maybe 66, 65, 66, 64 put spread. And on the upside, if you think the earnings are going to be similar to last time, right? It moved 5%. Last August, it moved 6%. Then, and the market is in rally mode. Maybe targeting 75. Right, let's see, call, yeah, 75. So you have a lot of position at 75. So maybe 70, 75 call spread. Depending again how much money you're willing to spend. Let's see how much is a 75 call. So August 15, 75 call is 59 cents. So you can participate in the trade. You can see a lot of people are actually trading 75 level. I mean, it could be short volatility. You can say, listen, I don't think we're going to break 75, right? Based on the expected move, we should not break 75. So you might want to sell spread. Or if you think we're going to have a repeat of last August trade, then maybe you put a call spread, right? Buy 75 call or buy 75 and sell 77 call, right, to lower this. But those are my thoughts on the Cisco. AMAT, or I mean, I haven't seen the home runs in the semiconductors, so maybe sell both put spread and call spread, right? So you can, I mean, you have to make a decision. Do you want to be long volatility or short? Like in AMAT, I'm inclined to be short volatility, so I would sell put spread and call spread. On Cisco, I'm inclined to make a directional bet that the Cisco, with AI and infrastructure, and you need data centers, you need networking equipment, and Cisco has been a strong uptrend, that this uptrend continues. AMAT has been underperforming. I mean, it's also a volatile stock, right? You can look at AMAT. So that announces earnings on Thursday after the close. You can see a lot of people are buying puts, 182.5, implying 5% move. And on the upside, 5% move, 200 strike. So you have 200 strike where a lot of positioning is, and 180 and 200. And if you look at the the implied move 180, right? 180, 175. So 175, and you can see on the upside maybe 205. So 170, I would target either 175 strike, right? Target either this 175, 180 strike, depending again on the premium. Let's look at AMAT premium. I assume it's more than Cisco. So let's see what's the 75 put that expires this Friday, 175 put. So you get 95 cents. It's about 50 basis points. If you go 172.5 put, about 70 basis points. So again, I would do a put spread, 175, 170, 175, 172.5. And you can collect premium on both sides. So I would do the put spread, and I would do the same thing with call spreads. Right. Let's look at 200 strike. $200. There's no 200. Let's see, 197.5. So $1.90. I would target 200 call. I mean, you can go to next week. Let's see, August 22nd, 200 call. So $2.12. So you can sell 200 205 spread. You know, collect premium this way, and then either next week or this week expiration. Any questions? Alex, welcome back. BJ, Dennis, Harry, Nancy, Robert, Ron, Wanda. So those are ideas. Right? AMET, I think I would probably iron counter, right? Selling call spread and put spread. Cisco, I think selling put spread and buying call spread. Any questions? Let's see. Microsoft is up. So Meta is at new all-time high after very strong earnings. So Meta is probably one of the better performing Magnificent Seven stocks. We have Dow Jones doing a catch-up trade. So equal weighted, right? Equal weighted S&P is still doing a catch-up trade. They're still kind of lagging. High beta, high momentum stocks, you know, are making new all-time high, right? If you look at QQQ. Any questions? We have a lot of movement in airline stocks as a result, right? Lower interest rates, and looks like people are still traveling. Prices of tickets are going up, and I mean also doing a catch-up trade. Right? It's been underperforming, but very strong move in airlines. Semiconductors are making new all-time highs. Biggest price section, interest rate sensitive stocks like regional banks are leading the market, small caps leading the market, airlines. Transportation is doing a catch-up trade, up 3%. And SPX holding on to its gains. I mean, it's marginal new high, right? It's, you know, it's basically retesting end of July. End of July price. Tim, welcome. Any questions? A lot of people today. Alex, BJ, Dennis, here, Nancy, Robert, Ron, Tim, Wanda. So on Yellow Tunnel, again, just encourage you to add info at yellowtunnel.com so you can get our webinar videos, right? Once a week we publish a webinar, and on Sundays we publish a blog. You can watch the recording. I encourage you, while we're still kind of trying to resolve the issue of synchronization of our orders and position with broker-dealer, every day we have a recording, right? We have Keith with Options Hotline covering, you know, most closing bells, and then I'm doing most morning bells. So you have 2 sessions that I encourage you to also participate. If you want to try any of our subscriptions, right? If you're looking for signals, you're more experienced trader, and you're just looking for trade ideas and signals, then I would start with aggressive power trader or weekly power trader. If you want to see what I actually trade, you want more kind of a hand-holding approach where I will tell you what to trade. We do send emails, SMS message, then I would start with dynamic power trader or profit accelerator. Any other questions? All right, so we talked about earnings, we talked about inflation data, we talked about tariffs. When we have a summit, right? If there's a ceasefire, right? Trump already came out and say there'll be a ceasefire between Russia and Ukraine. If that's the case, then definitely market is going to rally. So far, I don't see it in price of Germany. Initially, it went up, but now it's kind of consolidating. But that could obviously propel the market to the upside, or vice versa, right? If they don't find an agreement, if the war escalates, or there is no peaceful resolution, and some of these news already factor into the price, that could cause volatility as well. It will affect the market, BJ. I think it might, right? I mean, if they reach a ceasefire, then definitely there will be a continuation of this rally, right? And are we going to rally more? Because European Union is going to rally, there's, I think this will be net positive for the market. If they don't reach ceasefire and this is just kind of more of the same, you might have a pullback. I don't think it's going to be significant, or I think it'll be short-lived, but you might have a pullback. But I think it'll be short-lived because most people don't anticipate any progress on those conversations, right? Ukraine, they have different points of view and different expectations, and I'm not sure how close they are. Russia and Ukraine reaching an agreement, right? With the agreement on something, gold should sell. If there is a ceasefire, I think gold will sell. Gold will sell. You can see gold is kind of not going anywhere. It's been trading sideways. I mean, on the tariff news on gold or gold bars, gold did break out and make new highs, the gold futures, but then they came out and said they're not going to tariff, and it just got back into the range. So I don't think there's any new signals. But XME, there's a new signal, right? Metals and miners, the ETF is making new highs. What are the top holdings in XME? Top holdings. MP. So a lot of it is, some of it at least, is the uranium, right? CCJ. So CCJ is doing well and MP is doing well. These are in strong uptrends. There's some steel. CLF and new. CLF is new core kind of trading sideways. So I guess a lot of the lift is being done by uranium stocks, and this is precious metals, MPs. I think not precious, but rare earth metal. Sorry, rare earth metal and uranium. Any other questions? Let's look at which sectors generate new signals. So retail retesting all-time highs, but no new signal, right? Kind of retesting, so it's not breaking out. Oil has been underperforming. Metals and miners, we do have a new signal. XME continues to go higher. Consumer discretionary, underperforming, right? It's not at all-time high, getting close though. Healthcare has been underperformer. Utilities has been a strong uptrend. XLK is retesting all-time highs. Industrials kind of consolidating, no new signals in industrials. There's no new signal in banks. They're kind of been consolidating for a few weeks. Materials are up 1%. Home builders are up. So home builders continue to grind higher. That looks like a strong move to the upside with expectation that interest rates will be lower. So home builders kind of this contrarian, if you like contrarian trades, then this is something that's still going in the right direction. Biotech underperforming. Equal weighted S&Ps trading sideways. QQQ is new all-time high, and Spiders is new all-time high. Any questions?
It's a better program with a lot less baskets or whatever, you know what I'm saying? A lot less commodities. We don't need to have 30. We don't want 30. We want to keep it.
All right, any other questions? Alex, BJ, Dennis, Harry, Robert, Ron, Tim, Wanda. All right, so I encourage you to try out our services, right? You can sign up for any of these services. We do give 30-day money back guarantee. You get emails. We do send SMS messages every time I trade in these 3 services. And that's all I have for today. Thank you very much. Have a great day, and I will see you soon. Thank you. Thank you for participation. Same time, same place next week. We'll be here too. Thank you.